Welcome back, Ape Gang. Isn't it great to be proved right? Isn't it even better to be proved right when everybody's been telling you you're wrong? It's so good. It's such a good feeling. I think it's only surpassed by the fact that with this particular trade, we've also been able to make loads and loads of money. And those two feelings together are a real get it right round you to everybody who put a negative comment in over the past couple of weeks and the last 4 or 5 videos. So, for everybody who's in this with me, good on us. For everybody else, see you later. Oh, and I forgot to say, yeah, this isn't financial advice. I don't do financial advice. Never. You'll never see that on any of my videos. This is just technical analysis from somebody who does particularly well trading GME and who really wants you to do well too. If you're a returning viewer, I appreciate you more than words can say. And if you're new to the channel, stick around. I've got some great videos coming up, like how I lost my wife with an atomic swap and what I got back in return. That is a good one. You'll definitely want to stay tuned for that. The next world war and how you can make bank with Bitcoin when the bombs and bullets are flying. That's a cracker. Stay tuned. You know where the buttons are. Like, subscribe, like 3 times if you want. Comment below if you like the stock. Do you like the stock? I really like this stock now, you know. So either comment below if you like the stock or say anything else you like. You're welcome to ask me a question about the technicals I'm about to go through or about anything else in relation to GME that you're interested in. And I'm very sorry I haven't been around as much as perhaps some people would have liked me to. I'm working on a new project with Rocky Outcrop, which I'll not push on you guys, but if you want to find out about it, it's in his Rocky Outcrop Discord. You can find the links to that below in the description. So without further ado, and with a great congratulations to everybody who kept the faith, let's look at the charts. Back with another block rocking update. This is the Tradespotting TA for GME. We're going to start and go through the trade that I suggested a few weeks ago when we were at 240 odd bucks. I suggested that now wasn't a good time to buy. Then wasn't a good time to buy. You should wait for a retest of the breakout area, which it's debatable. Is that around here? Is that around here? It's certainly not down here. So the trade I had suggested was an entry anywhere in this area between 35, 38, 45, that sort of area. Of course, a lot of people have got that, myself included. And I suggested a stop here at around $30, $27, because if it goes below this point, it'll be breaking below the breakout area. And the next level that you would maybe look for a test at would be the bottom of that previous range, which would be in and around 13 bucks. And nobody needs to lose from 30 down to 13. You can just get out and get in again. So that was my idea at the time. There's the stop, there's the entry, and here's the projected trade. This function on TradingView is like a forecasting tool, so it's quite clean and can give you an idea of my thoughts. This was the trade I took. You can see here the risk reward ratio, crazy 53 to 1. So very high reward and very low risk with those particular suggested entries and exits. The first profit taking target was at the bottom of the gap. This is the gap. It's everything from the 4 hour to the 2 day, and above you can see this gap. Now, it's quite common for gaps to be at least tested, if not filled, and it appears, if we were to check the pre-market trading, as you can see down here, that it's still at 170. So currently we're in the middle of this gap, around the top of this wick. We're also around the top of these Bollinger Bands here. As you can see on the chart, I've got the Bollinger Bands on instead of the Donchian channel. I like to do that for my technical analysis when we've broken out of a range to measure the continued momentum. So more on that. If you want to watch more of my videos, you'll pick up on my particular trading strategies over time. So we're in and around this level, filling this gap. You know, doing that in pre-market doesn't constitute a gap fill. You need to see it on the the charts here on the open market chart, you need to see this gap being filled, and prices to close. Ideally, prices would close at the top of the gap, but you can fill gaps with wicks and then continue down below. And that comes to the central thesis that we're going to be talking about. Is this move a short squeeze that will ultimately end up in the prices going blasting off even more? Or is this just a bounce which will fail to break previous highs? And then subsequently be looked at as like a dead cat bounce. And that's the narrative that traders will put on this thing. Depending on if you're bullish or bearish, you might be inclined to listen to these sort of narratives, but my advice would be to try as best you can to ignore them and focus on the technicals. So that's what I'll try and do in this episode. We've covered the trade I talked about, how it's doing well, and what areas that we can expect to see some resistance. It may be that when markets open we get a little bit of a pullback. It's entirely understandable if that happens, and that's why I would have suggested taking profits at 137 at the bottom of this gap, which I did on the last video, and I'm pretty sure I did that on the technical analysis I posted on reddit/r/tradespotting, which I thought I'd set up just to help people when I'm not in the middle of making videos. They can check that out and they'll see my thoughts and text and charts. So if you want to head over there, you'll see it, or else you'll see all of my trades on Rocky Outcrop's Discord, where I frequently talk about the positions I'm in and the moves that I'm expecting. So enough about that. This trade, take profits at 137, take profits at 225, and again take profits at 300. This was my suggestion, which seems to have worked out quite well despite all the negative things that the haters have said in the comments. Why did I pick this rather than the previous body high over here or these wicks to choose my stop my exit on this particular trade? Well, because when we use Fibonacci's to judge the length or the strength of a move, it's very handy, in my experience, to look between particular levels. Those levels being the 236, as you can see, I had a profit taking target there. The 382, which was so very close to the top of the gap, you're better moving your take profit up there. And then up here at 320. Why 320? Because it's at the 618. 618, the start of the golden pocket. A very, very well respected level when trading fibs. And so 320 is where the top of that trade goes. But if it never makes there, that's not a surprise and is why we have these levels in. And also we can say that it doesn't need to do any of this under its current structural increase. If it settles anywhere between 230 and 145, settles in and traders close it up for the day in this area, the 2-day chart. So they got today and tomorrow. They close this up within this area where the gap is, then that'll give people pause for thought, because it would be normal even in a bullish trend for this to pull back to the bottom of the gap. So some people will say, does that mean that there's a good trade entry here, Jimmy, from the 135 level upwards? And my answer to that is, generally speaking, no, not really, because where are you going to put your stop? I mean, like the previous close for yesterday's trading day is one option, but you're already then taking a huge chunk of a loss. And where are your targets, right? Well, until such times as you see a concerted sustained move, then your targets are previously where we've just previously been. So your risk reward is like quite low. You know, that's tight. You're looking at nearly 2-to-1 there, and there's very few strategies that'll be successful over time. A 2-to-1 ratio, risk reward ratio. So sure, you can take it, but you'd need to have some sort of trading strategy indicating that it should be happening. So let's just take a quick look. I mean, if you're asking yourself, shall I get into GME now? It's a very different question from, shall I hold on to this position I took from down here? Holding on to a position you took from down here has got very low risk, especially if you're using a trailing stop or Williams fractals to manually move your stops. If you want to know more about that, just ask me in the comments. Then that's a very different proposition from, shall I get in now? Well, it might seem like the same decision you're making because is the price going up or down, bro? Actually, the question is, at what levels do we have sensible areas for risk management? And in and around here, we don't have very many, so this isn't something I would suggest doing. Also, because of the nature of price action, as we can see on the 2-day, and because of the strengths in the pre-market trading, which I think got around $200, we've obviously put in this shape, right? And you can see that there's going to be so very likely going to be resistance at this level, regardless if that's if people that entered here closing their longs, or people adding to short positions. You would anticipate a significant degree of resistance here, significant, if it makes it at all. You would also anticipate a degree here, a strong amount of it, and then in here there's question marks too. So the fact that we've got all of those negative structural issues to contend with suggests other future possibilities, which might make this a redundant idea. For example, if we did make it around these levels, I'll just get this brush on so I can draw something out. If we did make it to around these levels and pulled back, say down to a 50% retrace of this move, something like that, then there would be a good idea for an entry, because you'd have a pattern to work from. The pattern would be a cup and handle, which generally tend to go down, cup, and then offski. And so that's something that a lot of people will be looking at if we do have a 50% retrace on this particular move today. So that's one pattern. There's also other patterns that could form over time. We'll see them as we go down through the time frames. But now that we're on the 2-day, and we were talking about the possibility of taking that trade here, this very dangerous trade, let's look and see if there's any strategies on our indicators which suggest whether that's a good idea or not. So we'll get the indicators up. Here is our RSI EMA cross from Rocky Outcrop, and as you can see, we're coming in for a test of the EMA here. Now that's come in red, but we can easily change it to green. And that would be positive if that crosses above. In saying that, what we're actually saying is that under current circumstances, it's not yet bullish. While a cross would be seen as a positive indicator, so let's just highlight that here. You had a negative cross, that's bad. It stays below it significantly. We're on the 2-day time frame, so the chances of false signals are quite low. And you're above it for a number of days, and it causes a move of a good 5, 10, 20, what's that, about 30%. That was quite a quick down and up again, but look, obviously this one, enough said about that. Again, when it crosses, it's a significant price move on the cards in most scenarios. Even this very small one here, you can see prices moved from 20 down to 17. Hey, 15%, that's not all that bad. Certainly tradable. So pardon my math if that's wrong, but it's close enough for me to work it out, good enough for me to rely on those sorts of quick sums. So that's a 2-day time frame. We've looked at the RSI and we can see that we're in with the potential for something positive. If we also look at the MACD, this is the second most common indicator I'll use to initiate a trade decision. Pardon my terminology. Here we can see that the cross is a potential, and that would be a positive scenario. We can also see that this momentum that was coming down, forcing us to the downside, as you can see here, it started to peel off on the histogram. This means that momentum has started to weaken. Now, if the momentum crosses back above the center line here, and this crosses positive, and our RSI puts in a cross over the EMA, then we could then look at price action and say, well, where did it settle up? Does this 2-day time frame with these positive indications also structurally suggest a bullish continuation, and that would be closing above 140 on the 2-day time frame. So if you're a very safe trader, you take 2 days as your entries and exits, then you'll be looking at this turning out positive, this turning out positive, and us resting above one of these important levels of resistance, which would then give us the chance of turning it into support. So that's your 2-day time frame technical analysis, which people like, they want to look at the 15 minutes. And I know some people spend all their time looking at the 1-minute charts on the things they trade. Now, I'm not going to say whether they're good or bad traders, but the very best traders put a lot of emphasis on these higher time frames. So the 2 days where we started, now we're going to drop down to the daily, which is, some people might say, less than 50% as reliable, but for trading things like Gamestop in this particular industry, I think it's perfect. So on the daily time frame, as you can see, we've reached the basis line on the Bollinger Bands. Basis line's also the 21. Let me just double check what I've got it set at actually. It's normally the 20. Yeah, so this is our 20 period moving average, which on something like the daily time frame is good for giving us an indication of the short-term trend. So we're between the basis line and the low level of the Bollinger Band, which I imagine is absolutely miles away because of that move we had. Yeah. So the bottom level of it's not particularly useful. The top level though does come in line with the bottom of our gap, more or less. Certainly on higher time frames it's around there, and it in of itself will be an indicator for some people to enter a trade. So for example, if you trade using the Bollinger Band and you would your particular perspective on this would be, if it manages to open and close a body candle above the basis line, then you could expect a test of the top side, right around 290, right? And if it got there, why would it not just go on up to the body close, the candle, the relevant candle around 310, 311? Well, the chances are it would, right? In fact, like the chances of an asset that reacts as this one has done, particular market participants, is that it could go a lot more, but then also pull back. So these take profit areas from the 2-day time frame are also relevant on the daily, which is I've drawn them. I didn't just do the technical analysis and pull it out of my backside. I've been looking at this for a long time, as lots of people know who've been tuning into the channel. So our indicators on this time frame and our structural analysis isn't all that different, but we do get an idea from the Bollinger Bands that it would take another thrust of momentum to make it on past these levels to these higher targets. If we look then at the candlestick patterns, we can see that we broke out of this this downward sloping channel. Downward sloping channels do have a tendency to break to the upside, and the measured move from that is only something like, take that over, it's only something like that, in and of itself, if that was the only thing we were using to take this trade, would have only justified a move to around 65. But that's quite a tepid move when the people who are trading it are like yourself. So well, we've already achieved something. We're starting to see that certain types of traders might not have lots of confidence in this particular move. What can we also say about it? Well, we've crossed over the center line and have put in a positive cross on the RSI EMA. That's a very, very positive sign on the daily chart, because we don't tend to cross it without a significant degree of price action. As you can see, the negative cross, the positive cross, the negative cross with that 20% move, the positive cross here with that's 12 to 23, so like 33% above. Then we've got another one here, 17, took us down to 13, gain about 35%. So the crosses on the RSI EMA are normally very positive, and we very rarely do we see them other than around here where they don't last for an amount of time that you could consider reliable. So it would be good if this crossed and stayed crossed, and a la this sort of thing. This would be ideal for this particular indicator. If you were looking to get your hands on this indicator, you can get it on Rocky Outcrop's Discord, and you can find his channel by searching Rocky Outcrop on YouTube. You can find the Discord link in the description of any of his videos, or I'll try and put it in the description in this one. And I'll look forward to seeing you there. If you want the indicator, you'll get your hands on it easily by showing up and dropping me or Rocky or pretty much anybody on there a message. You'll also be able to find it in the tabs on the left. So like, what we really want is this sort of a cross, one that's supported with every time we come back we bounce and rise, and this is a very good sign. It's what took us up from the deep fucking values entry to like, even with this pullback, that would be normal because we've seen so many traces through and above the Bollinger Band and back inside it, touch off the basis line back again. And this gives you an idea of what the Bollinger Bands are useful for. You can see here we broke through it at the same time that was with this negative cross. It was a good idea to get out of this trade at this particular moment. You can see here with this pullback, but we stayed above this particular indicator, we stayed above the EMA. See that suggests, who knows, maybe this particular cross back through this negative one isn't so bad, which it turned out not to be. In fact, this move here, when we were talking about deep fucking values entry at $3, $4, $5, had you been in his position and been using my trading strategies, we would have sold here and we would have bought here. But the successful confirmation that this trade was going to make him and a lot of other people very, very rich only came here at this retest of the $17, $18 level, where we were above the basis line on our Bollinger Bands. We had been through this period of flux on this indicator, and we were crossing over with the EMA now below the RSI while we're above the center line, and price action having turned what was, as you can see here, resistance, like put in a horizontal line so you can see it, and then I'll delete it because it messes up the charts. We're all too busy, but I can see in and around this area where I dropped that line, it was candles bounced off it, the wicks bounced off it, wicks bounced off it. Here it looked like we got above it, come back below it, sitting on it, below it, testing it again, and then our confirmation with a bullish candlestick pattern, with this bullish engulfing. And zoom in a little bit more, even though that makes the indicators tiny, you can see that this was also a confirmation of this trend line, which is also what caught us for the bottom of this move. So some people would describe this line in this area, despite it being horizontal, people would suggest that that's a demand line, and in here is where you would take the this is in under current market conditions is where I would put my emphasis. Other traders that come along and say silly things in the comments, they put their emphasis on like the supply line, either something silly like that or maybe something more like this, and they say that this line, which I'll just make red so that you get the impression of what people are talking about when they're using it, they would say this is a supply line and this is what's dominating the current price action. I think that's absurd, and that a more sensible way of trading under current market conditions is to use this demand line. So you can change that to green, but we've got a lot of green in the chart already, so there's no need for that. Anyway, that was that demand line, and that was the place where we started again another breakout. So as you can see, this gives us another good entry position around 45. This might be a potential re-entry for people who missed this particular move, who'd cashed out their GME shares somewhere around here, but they're desperate to stick it to the hedge funds without at the same time costing themselves unnecessary risk. So they might think somewhere around here is a good re-entry. But in saying that, you might get that today, or you might not get that for a few days to a couple of weeks, if at all. And if it does come back down there, depending on what's happened in the preceding time, it might be a terrible idea to get in. But As we are right now, this is a good idea to enter in and around this level, 45 bucks. And I might be saying that for weeks, and then when it gets there, I might say, actually guys, it's not a really great decision to get in there right now. But as things stand, this is a structural suggestion. So that's the daily time frame with regards to all of the pertinent information. The other thing that I did think would be interesting about this, and on the, as you can see on the MACD, I mean, if I double click this, we can zoom in. We were very, very, very close to having a positive cross here on the signal line and the MACD. If that should happen, as we're below the center line, and as our momentum has been weakening, if that should cross and confirm our cross, and subsequently we would form some sort of trend on momentum here. Say for example this went up to the, you see green, dark green, dark green, dark green, dark green, light green, light green, light green, down to around here, say around the center line. Say our cross works out, but it's not particularly explosive, and turns around and comes back again. If we should see these cross again, say they both come up and then they cross at this point below the center line, but catching this trend that we've drawn in with this green straight line, then you can see that that again might be a really good move. And if that were to happen as prices retested the breakout area, then some people would say that that's a good breakout signal and a good retest, and it's a worthwhile entry. It might be if you also consider where your stop loss would be, and if your stop loss is at the bottom of this downward sloping channel. I don't know why that's made that so ridiculously. Who takes a stop loss with that? Anyway, so thanks TradingView. If I make that auto, does it get bigger? No, TradingView is not my friend today. So if you were to take this particular trade, you'd have your stop in and around this area, about 10 bucks, 9 bucks, and you'd have your entry, it's not 9 or 10 bucks you're talking about, it's in and around the 35 bucks, 36 bucks, 37 bucks, 38 bucks. So, you know, people who've entered here are now able to move their stop loss into profit. If you're that type of trader, congratulations, you know, your trade is now risk free. If you're looking to get a re-entry and you follow the technicals that I just suggested here with the MACD and the RSI, also still being positive when this happens, and a positive retest of this area, if you were to look for some sort of positive candlestick pattern at this point that gave you an entry, then it would be around this level, that would be your stop, and again you'd be targeting the previous high. So your first take profit level would be in at the top of this candle at around 90 bucks. Then your next one would be Safe Trader, take some there around 133. Again, your same profit taking level, so the top of the gap at around 220. Now, the fact that there's so many confluences around this level, the top of the gap, the top of the Bollinger Bands, the good reasons to take profit from this trade and the one that I've been suggesting for weeks, means that you don't need short selling pressure to come in to push the price down. You just need people to sell what they already own, which a lot of people will be doing. They'll be taking their profits there. So bear that in mind. When we see prices get to around 220, then we can see a pullback, which is why in the pre-market trading we saw prices pull back in around these areas, right? Because there's a real reason for it on the charts. Some people say technical analysis is crazy, but in truth, it's very helpful for managing your risk, which is essentially the whole point in it. So also looking at this particular trade for the re-entry, or the one we're already in, as you can see, the 236, this Fibonacci is drawn. I've got a video on how to do Fibonaccis, and it's the best video I've ever done, so you should definitely check it out on the channel if you're interested in learning about these things. But anyway, so you draw in from the top here to the bottom of this particular move, as you can see, top, bottom, get that more accurate, top. As you can see, the 236 comes in and around the level of this bottom of this gap It's also the 236. For a Fibonacci to be valid, your retracement as in a retracement against the trend direction, so you draw your Fibonacci in line with the trend. Oops, move that back. In line with the trend from left to right, so it goes down, and the retracement is a reverse in that direction, and that retracement needs to reach the 236 for the Fibonacci to be valid. It's only after that point that you can start taking Fibonacci's targets from your Fibonacci and draw, say, a trend-based Fibonacci extension, which I also cover in that video I mentioned earlier. You should definitely check that out. So that's your technical analysis for the daily time frame, including these two indicators, which I think are particularly helpful for trading this kind of asset in this kind of environment. So we'll drop down now. The 12 hour, I haven't done the 2-day and the daily. The 12 hours I'm going to throw out any huge massive surprises for us. So here we are on the 12 hour, and nothing's really changed. A lot of people say this looks exactly the same. Other people would say, Jamie, your charts are far too messy. There's lines everywhere and I can't tell what's going on. For me, these lines illuminate the potential moves the price will take, so I find them to be helpful. If you don't like them, feel free to take a run and jump. So here is the 12 hour. As you can see, the gap is screaming out to be closed, but this is already what should we describe this as? Abnormal candle size. Even during our huge rise up, we didn't get one daily candle that was this big. So while that would be obviously a very bullish fact to consider, it does also make us wonder, in a market which is all about ups and downs, are we likely to see a bit of a down? And then the question will become, if this is just a 12-hour candle, it's not a daily, or I mean it is a daily, being it is a 2-day as we see. But if the majority of this move is expressed by the 12-hour candle and the subsequent ones are lower, then, or are a continuation downwards, especially if there's 2 or 3 12-hour downward candles in a row and we come back to this sort of level, you have to ask if the momentum of this move was just a singular event and rather than a continuation of any trend. So this is very important to keep your eye out, and why another reason to say don't enter here. If you follow my particular method of trading, you wouldn't enter here. But that's not to say a lot of people would disagree with that, and I'm sure as soon as market opens, people will be scrambling all over themselves to buy it. And you know me, I say buy GME, but I don't say buy it now. So I give technical targets based on risk management, because I don't want anyone to lose money. You know, not that this is financial advice at the best of times. You know, like I've said plenty of times, I'm just an ape. Candles for breakfast, crayons for lunch. But technical analysis would suggest don't enter here. So let's go down. We've already covered anything we're going to learn from the indicators on the daily and the 2-day time frame. Let's go down to the 4-hour. Now this is less useful. It is okay for making decisions normally on stonks if you are in a move that you plan to take profit on within the next 4 hours or a series of 4-hour candles, and you can see an exit point which hasn't changed from the trades entries down here. You know, I mean, this was the entry, there's no getting away from it. This was the place to enter, not here. The places to take profit are only just above our heads. I suppose a couple of them are twice as far up as this particular move, which again will tempt people in. But that's how the markets work, right? They tempt people in. You know, some people have to lose money for other people to win money. So if you're trading, i.e. getting in and getting out of this move, and you're not just buying GME to stuff it to the hedge funds, and you can afford to, and you can't afford to live without investing at this level, then sure, go for it. But if you can't afford to do without the money should it pull back, then wait. It's simple. Don't let temptation get the better of you. Follow the technical analysis. So the 4-hour, I'd love to be sitting here saying, buy, buy, buy. We've done it, guys. We've killed them. The 4-hour isn't saying that. You know, although this is the biggest 4-hour candle we've had, perhaps in a number of years on GME, we could still say that that might suggest it's due a little bit of a pullback, and then we can test the strength of that move. So wait is my answer from the 4-hour. And we can go down to smaller things like the 30-minute, and you can see, well, wow, here was the entry given by this indicator on the RSI. Like, let's not, I mean, I don't touch too much on bullish and bearish divergence on this particular asset at this particular moment in time because of the huge thrust up and retrace we had and how that will distort the momentum across these indicators. But now that a lot of that has died out and we're down at the 30 minutes, when we're looking at just, let's zoom in on this in particular, this indicator, just so we can see exactly what's happened and how this works. You would take a trade when you've noticed a positive cross. This is the idea. You'd also do it when price action, as it did here, reached some level of what might be seen to be support. At this point, it was the downward sloping line on this channel, as we could call it a demand line. As it hit here, we crossed. That's now positive momentum on the RSI. Now that's a very positive sign, and it's an entry signal. Went up, we bounced off past the top Bollinger Band, but hit the top of this channel again and came down only to the basis line on the Bollinger Bands, at which point we bounced again, and not off the EMA, but off this historical level that if I put in horizontal here. Did I do that? Did that happen? Didn't seem to. There it is. We bounced off that sort of area, which is very positive. You know, if you're bouncing off levels of previous resistance, turning them into support, that was taken as a very positive sign by the market. So despite the fact that we crossed below this RSI EMA line, crossed below here, and we were below the median line, the basis line on the Bollinger Bands, we were very close to the bottom, which bounced. And that bounce took us back above the RSI again. And you see, we don't need it on in price action anymore. Took us above RSI again when we were above the center line. So we crossed above the EMA, we crossed above the center line, and we did all of it as we were breaking out of the top of this channel that we'd been in, this formation. So you would then say, let's draw the measured move out of that on the 30 minutes. You'd say first test from top to bottom, drag it over, pop it in here, and you say, look at that, we got above it, and that took us above this EMA on the short-term time frames. This particular one is the very simple, so 200. It's red. It's the only one I've got on. Really obvious. It's very important for measuring trending moves. We broke above that. Not only did we break above it, but we had a candle then subsequently open above it. And obviously the market closed, so did this candle. We closed above it. So this 200, when it's initially broken, very, very frequently is an area that's retested to confirm that we've now changed our trend on this particular time frame. So a very strong word of caution of anyone who's trying to buy here. Again, you would be better off waiting for a retest of this area around 65, 66, 67. Now some people will be looking at that and say, oh no, we went from 90 to 67, yeah, that's 30%, that's like just under, but that's a huge drop, you know, things are over. But they're not over, they're just getting started potentially. It's a retest, and if that retest proves to be successful, then that's a very bullish sign, you know, that would outweigh all of the other bullish, all of the other bearish indicators that I've been suggesting, you know, wait until it comes back down even lower. If we manage to put in a successful retest of the 200, even though it's only on the 30 minutes. And why do I say that? Well, because if we're putting in a retest of the 200 on the 30 minutes, and we zoom in on the MACD, we can see we've had a very, very positive cross here, which was in line with an increasing trend in momentum. The drop didn't take us below the center line. The negative momentum never got any steam. And there was obviously some sort of catalyst in and around this period. Now, if you look up the short interest data, it would suggest that it wasn't shorts covering that caused this move. Instead, it was, in the majority of that action was people going long. Now, why would people go long at the end of a week and a very cold February on an asset which the news catalyst for was the hearing, and happened, a number of days ago now, and all the positive ramifications for that have been shaken out now. So we can see that it isn't necessarily obvious news that's driving this price change. It isn't necessarily shorts covering their position. It's people going long, and it's those people that will then define the momentum and the sustainability of this trend, not other market participators. It's those ones, and their conviction, and their conviction will be judged on a retest of the 200. Perhaps you'd be looking at the 200 on the hourly and thinking the same thing. I know I would be. People will be looking at the 400 and the 4 hour and saying, well, we're well above the 200 and we've been in a positive trend despite this pullback. And I tend to agree with you on those time frames. We are still in a bullish pattern because we've put in a higher high. Of course, we've not put in a lower low. That's not going to happen. That's not going to happen for a long time if you use my particular type of analysis. Some people think it's going to happen imminently, but they're lunatics. So when you go down to the 30 minutes and you go back up, confirming it through various timelines, certainly on the hour, you can see that it's very likely we'll have a retest here. And when we're on the 12 hour, the daily, and in particular the 2-day size of that candle, you can see that a retest of slightly lower areas is very possible, perhaps even likely. Okay, so bear those things in mind. There's lots of other stuff on this chart that some people will be confused by, other people will recognise them if they've watched my Fibonacci video or they've seen me trading other assets. These Fibonacci time zones, which some people think are gobbledygook, but they do give you a degree of statistical reliability when you're trying to take trades which involve a degree of time analysis. So people say things to me quite often, like surprisingly often. They say, well, when is it going to break out? When is it going to break out? Because they know that I would have been believing in the short trade for a long time. And because I didn't necessarily think that this was the entirety of it. When's it going to happen? When's it going to happen? Well, obviously it's impossible to predict when, especially with any degree of accuracy. But you can measure out when other people might be anticipating such a move. So the fact that we went through this particular vertical and then boosted up would give some credibility to this. It also started low to high, caught a degree of the high, caught a degree of this low, caught the breakout. And the next one is over here, which comes in at around, the 5th of April. You could never take 3, 4, 5 days on these sort of things, either side of this. What is within 3 or 4 or 5 days, other side of this? Well, the earnings report. TradingView have got it down as the 31st of March. That's a bit of a surprise. I thought it was the 25th. I may be right, I may be wrong, but regardless, this is when, if I had to make a call at the threat of having my head chopped off otherwise, when do I expect there to be a big move? Now, I can't predict the direction of the move at this point in time with any degree of statistical reliability. I can just go on what the fundamentals tell me and what my opinion is based on my experience, and that is that on this date prices will go up. Where they'll go to on that date and whether that'll be initiating a gamma squeeze or ultimately our big short squeeze, then it's anybody's guess. But that's something to keep an eye on in and around those dates. So bear that in mind when you're doing your own technical analysis, that there are plenty of other opportunities, if you want to stick it to the man, within this asset over the next 24, 48 hours to even up to including the end of March. There will be more opportunities. So you don't need to panic, and you certainly don't need to take crazy ass leverage trades on borrowed money because you've heard somebody else's advice. You want to be doing the sort of thing that I've done here and planning out potentials. Then you need to mark off your maximum loss that you're prepared to take on those trades using a stop loss. And then you work out where your profit taking targets might potentially be, and then you see if that's got a risk reward ratio, that trade, that suits your trading style. Now, all of those three main points I just made there are all vastly more complicated than I alluded to. They'll take time to learn it properly, and if you're learning it incorrectly, it'll take even more time to unlearn those bad mistakes. So I highly recommend you check out Rocky Outcrop on YouTube. He, by far and away, the best technical analysis you're likely to find, and he'd cover any asset that you want him to look at. So all you need to do is ask him during live chat. So definitely take a look at that, and definitely think about how you're going to trade this if you are, rather than just enter when you see some positive momentum, you see some other people making a move. That's not necessarily, your move. You want to make your move based on your own decisions, which are based on your own technical analysis. And the reason to do that is because you can iteratively improve that process in order to become more profitable and take less risk over time, which is the definition of being a good trader, is that you can manage your risk well over time. So bear those things in mind, and for the last 5 minutes, we'll look down at the 15-minute time frame, and we'll say something that is quite positive. We're tracing above this Bollinger Band. As and when we stop doing that, we can expect a retrace to the basis line, which isn't happening anytime yet according to the 15 minutes. In fact, we're outside the upper level of the Bollinger Band. This could shoot off again, it could easily hit 136. There's nothing stopping it if it gets in and above 136 to go into 230. This is the gap fill. This is so very likely to happen. On the 15-minute time frame, it seems like it's going to happen any second as soon as markets open. If that does happen, could we then see a gamma squeeze? As I was saying to Al Katawazi, you and him and I were talking about this nearly a month ago, that those option contracts that settled on the Friday just past, that closed, expired, have now settled. They settled on Monday and Tuesday. So the fails to deliver will have happened. The short covering will to a degree have happened. And it could be that the people going short think that they are to a degree safe when they're so not safe. It's so very dangerous for them. If I was in a short trade right now, I'd shoot myself in the head. If I was in a long trade right now, I'd have my stop in profit, and I'd have my take profits targets entered for that trade, so that when the price got there, I took them and wasn't out eating a sandwich wishing I'd done it when I got back, a crayon sandwich. This would be this looks very, very positive. But then, as we're saying, it's a 15-minute time frame. We could just be on the 1 minute and saying, wow, look how positive it looks. It does look positive, but when it doesn't, when it looks bad, then it looks really bad. So bear that in mind. And that's your technical analysis on GME from Tradespotting. If you'd like to see more, subscribe, hit the like button, definitely hit the like button, that's very much appreciated. I can't say how much I appreciate you even just viewing this video, really do enjoy making them, so to have people come along and watch them is great. Up until about a month ago, I would have had maybe 60 or 70 people watching videos that I put so much effort into teaching people how to do technical analysis, and now that I've started talking about GME, the Ape Gang, you guys are amazing. It's getting 24,000 views on a video and 8,000 on the next one. I just put up a highlights clip of Roaring Katie and it got tens of thousands of views, so thank you so much for everybody who interacts and engages with the channel. You make the whole thing really worthwhile. I really appreciate it and enjoy it, and every single one of you, all of you, especially you returning viewers, I really appreciate you. And so that's it. I trade other things. If you want to check that out, you'll see me in Rocky Outcrop's Discord. I'm particularly busy at the minute because there's a number of us working on a project there. Yeah, I would tell you all about it, but it's likely to be very oversubscribed. But yeah, it's a very good project. It's at the seed level of fundraising at the minute, and you can see all about that, and you can see all the other things that I'm up to over on Rocky Outcrop's Discord. So definitely check it out. Thanks again. I love all you guys that leave positive comments, and I absolutely destroy the people that say that GME is not going up. I destroy their arguments. And if they've said anything offensive to anybody in the comments that's a diamond hand ape, then I take them to pieces, and I come back when price will go up and I laugh at them. So if you're one of those haters, bear in mind, you're probably not as good at technical analysis as I am. You probably don't have my experience. You're probably out of your depths arguing with me. And not only will I mock you, I will put all of your stuff on videos and have everybody else who's enjoying their gains get something else to laugh about. So that's the message for everybody, lovers, haters, and everybody in between. I appreciate your interactions and I appreciate your continued viewing. Thank you very much. Got lots of great videos coming up. One's on how to use the MACD for an 80% success rate on your trades. Imagine that, 80% of your trades being successful without even needing to engage your brain. And the following video is a cracker on the coming World War and how you can use Bitcoin to make bank when the bombs and bullets are flying. Please like this video. I love making them and I'll make endless more if you want. And remember, diamond hands.